What's up, guys? Before the video starts, I just want to let you know I messed up again and I said for a bearish market structure, I said lower highs, higher lows, and it's lower highs, lower lows. Um, that's my bad. I was editing the video once again and I messed up. That's my fault, but just disclaimer, just don't listen to that part. But listen to the rest of the video. It's all good information for you guys. What's up, guys? Last time I talked to you guys about liquidity sweeps in the market and how to find them. And I got this all set up again for what you want to do for liquidity sweeps and a recap of last video. This video I'm going to talk about break of structures and I'll briefly go over liquidity sweeps as well, just to remind you guys. But I'm sorry for the mistake last video. It's higher highs, higher lows, not higher highs, lower lows. And then bearish is lower highs, higher lows. And this also signifies a trend. Spotting a trend in the market. So that's all it's doing, is just spotting a trend in the market. And it just shows if it's bullish or bearish. And with that, I'm gonna show you how to enter a trade, liquidity sweep on high time frame, then break a structure on a lower time frame. So let's get right into it. I'm on ES again. We can go to the daily time frame to start. So right on the daily time frame, I'll refresh you guys with liquidity. So we have liquidity up here because that's a high. Liquidity right here, that's a high. High. Low. Low. I get it gets really messy, and I'm sorry about that. But then we can show trends as well. So right here, high, higher high is right here, by the way. And then lower high, lower low from this low. And then lower high, lower low. We have a higher high right here, but then we get backed up with a lower low. So and that does when it does get tricky with that. But yeah, it's just as simple as that. With that, it's really is just that simple. Oops. It is just that simple. And anyways, so right now we're on the daily. I'm gonna go to the 4-hour, and I'll show you guys some break of structures. So for a break of structure, they're a little bit more interesting. So this is a high, obviously. And right here, you can see this green candle. Well, it's blue, but it's technically green. And it went up and it opened above this high, right? So all it indicates is a break of structure in the market. But with a break of structure, I'm gonna write this down. Break of structure. So a break of structure, once it breaks, has to open above the high that was made. I cannot type. If it creates a new high, replace the old high, and the new high indicates if it breaks structure. So what I mean by that is, I'll show you an example. Let's see here. So right here, it didn't break above this high, correct? It swept it, which I went over that in the past video. So this becomes a new high because you see a green candle and then a red candle. Bam, that's a new high. So right here is going to be a new high as well. And it breaks it right here. This, if it opened above here, this high right here, that's not a break of structure because that's not a recent high. This is a recent high. That's all it is. With that, though, I'll show you a low as well. So right here, it didn't break below this low, correct? All it did was sweep it. It swept the liquidity, and it created a new low. So now your liquidity and break of structure is going to be right here. But then as you can see, the market's continuing because the market never stops. So the market creates a new low right here, red, green, new low. And then as you can see, it breaks through here. So now you're like, okay, it broke structure. And obviously you need more confluences with that, but it broke structure. And with that, it's really just that simple. And it's like, you wouldn't have been looking here for a break of structure. That would have just been liquidity. You wouldn't have been looking here for a break of structure. That would have just been liquidity as well. And this liquidity was already taken from this wick right here. So if liquidity gets taken as well, so right here, it wicked above this high to a low. So it wicked above it. It took out all of those resting positions right here, and then it went down. Right here, took out all those positions right there, and it went down. Right here, it took out those positions, that liquidity, it took it out, and it wasn't enough, and the market kept going down. And then you went right here, and it took out this liquidity as well, and then it went up. You never know when liquidity is going to get taken until you get a confluence added on lower time frames and on higher time frames when liquidity happens. So in here, let's go to more recent. So let's go. I can show you examples on NASDAQ too. It does the exact same thing. Liquidity right here. It doesn't get taken until right here. And it wasn't enough liquidity. Liquidity right here. It broke structure to the uptrend right here. But then it went down. And that's okay. That's going to happen. It's trading. It broke structure right here and it went down. We have liquidity right here. It got hit right here. It went up a little bit. And then it created more liquidity right here. And it took this liquidity out and then decided to go up. So here, let's look at Monday. So Monday, let's not look at Monday. So here, I'm trying to find an example for you guys where it takes out liquidity and follows everything, and you end up taking a trade off of it. Let's see here. Yeah, so Monday, right here, there's liquidity. There's liquidity right here. I go down a 5 minute. Did I pass it? Okay, so there's liquidity, and then there's liquidity again. It took out that liquidity pre-market, and it revisited it, and it didn't take out this liquidity yet. So then you can go scale down to the 1 minute even, and I'll show you a 1 minute example. So then market opens, see nothing, there's nothing. What do you see though? What are you seeing in the market right now? See a high right here. You see a high right here. and you see it create a new high. And you're like, okay, it broke structure right here. This is the break of structure. That's a really janky arrow. There, it broke structure right here. It broke structure, correct? So it broke structure right there. So then you're like, okay, oh my god, it broke structure to the uptrend. What's going to happen? It's going to continue going up because it took out this liquidity all the way down here. So then you're like, okay, I'm gonna put my stop loss at this low, and then since I'm smart, I'm gonna be like, okay, there's this hourly liquidity all the way up here. What am I gonna do? I'm gonna put my take profit right there because I know price is gonna wanna lean towards there. And that this is beginner stuff. It really is. It's just beginner learning. It's a winning trade right here from a break of structure and liquidity sweep. That's all it is. Here, I'll show you another example. We'll go to the daily time frame. This is on every time frame, every pair, everything. There is nothing this is not on. But here, what happened? It swept the liquidity and it went up. There's this high right here, swept the liquidity, created a new high, went up, swept this liquidity, created a new high, and then what happened? It had this low right here and it broke below the low, and this is recent price, and it went down. It's going to go down because it broke structure to the downtrend. That's what happened. It broke structure to the downtrend. Right here, we have the same thing. We have a high right here, another high, another high. Nothing gets broken. And then right here, break structure. Bam. Break structure to the uptrend, continues going up. That's all it is. And it's super simple stuff, and it's super easy. And we're going to go back to S&P. So right here, spotting a trend in the market. All you need is for bullish market structure, all you need is higher highs, higher lows. Bearish market structure, you need lower highs, higher lows. How do you enter a trade? Liquidity sweep on a high time frame, then break a structure on a lower time frame. It's really that simple. And obviously I'm going to get into strategy creation in a couple of weeks, but I'm just telling you right now that you can enter off of these confluences, and you need to know these confluences. And if you don't, you will never be a successful trader. You won't be. You got to have that mindset. If you don't get this stuff on lock, you will never be a profitable trader. You never will be. You will never be a profitable trader if you don't know liquidity, if you don't know a break of structure, if you don't know liquidity sweep. If you don't know where the market's going, you're never going to be profitable. So why are you going to waste your time trying to learn how to trade if you don't know the basics of trading? It's really that simple. And a break of structure, it has to open above the highs that was made. If it creates a new high and it replaces the old high, and the new high indicates if it breaks structure. That's all it does. Right here, I'll show the last example. We have a high right here. We have a low right here. Here, I'm going to show you guys lows. There's a low right here. It broke structure. It's going to go down a little bit. It created a new low. Creates a new low. And it barely broke structure and it went down. We have a new low right here, and it broke structure and then it went down. And in later videos, I'll show you guys like when to catch, when it's gonna actually move down. And if it's like, here's the thing, just because it breaks structure does not mean it's gonna always go down. That's not what it means. Just because there's liquidity that's swept does not mean it's gonna go up or down. All it means is confluences to add to your strategy. And I'll show you guys different confluences to add to your strategy. And if you can't figure that out, like I said before, you will never be a profitable trader, ever. You just gotta learn the basic stuff to learn the big stuff. And I was in your guys' shoes. That's the thing. You gotta learn this stuff. And if you never do, you never will be. And I'm just repeating myself, but like, it needs to get engraved in your guys' head. That's it. That's all I got for you guys today. Just do the right thing and learn the right things, and you will be profitable. I bet you it'll take you 3 months max if you learn all the right things. Everything. You will be profitable in 3 months. Almost guaranteed. That's all I got for you guys today. Thank you for watching the video.